Welcome back. This one could be important. Earlier this week, the second largest bank failure in America has just happened. It looks like there might be more pain to come, and I'm going to be going over the next 3 banks that will possibly fail. I'm going to share the reasons why they may fail, and towards the end, I'm going to share a little conspiracy. I think how this could be maybe a sinister plot to make banks fail for a quick dollar. So let's get right into it. We have more bank failures coming among us, and just yesterday, JP Morgan bought the most recent failure, the First Republic Bank. And he said that the regional crisis is over, but this is just the initial phase, and that would imply that there is more pain to come. So I want to take a look at history and go back to the 2008 crisis. And yes, I am aware that the 2008 crisis is different than what's at play here, but the important issue right now is momentum. See, when things get rough in the economy, people start talking person to person. That fear starts evolving like a wildfire, and it keeps spreading throughout people until bad things start to happen. And that's exactly what's happening with the last 2 banks, and I think it may continue. So this chart is brought to us by the Federal Deposit Insurance Fund, and the chart shows us the number of banks failure by year. Keep an eye on the red line, and I want to first look at 2007, just 12 months before the 2008 crisis. We all know what happened in 2008. Yeah, I know, not good. But in 2007, there were 3 bank failures. But how many bank failures are happening right now? Well, it's 3 as well. The numbers are kind of irrelevant. You can't just compare year to year. I want to compare momentum. And what I'm saying is when it rains, it pours. So let's look back at the chart. Now, the following 12 months is when America began falling apart. The momentum picked up, people got desperate, they lose their cars, their houses, and it just spirals and it gets worse and worse. 2008 was the crisis, but it wasn't until 2009 and 2010 that big amounts of banks were actually failing. And it wasn't for another 5 years that after the bank failure started that things started to calm down. So are we on track for another crisis like 2008? I'd really appreciate giving the video a like to help out more people with this information. Here's where I'm going to be different than the experts, okay? I'm going to say, I don't know. Remember, when experts, they're paid to give their opinions. They're not paid to say, I don't know. They won't give no opinion. But every day it feels more and more like the economy is breaking down, and bank failures seem to be coming more and more often. Okay, we all know investors. Investors, they are smart people, and there's a reason that these banking stocks are dropping like rocks. This week, the whole regional banking sector is down 7.5%. A huge week for the banking sector. PacWest Bank is down 30.3% this week. It was halted 14 times. And then West Alliance Bank is down 12%, down 60% from a couple months ago, and it was halted 6 times this week. Metropilitan Bank is down 28% this week. So it shows me that investors kind of know that something is in the play and something is coming up, and they are going to show and protect themselves by taking their money out. So let's take a look at the 3 reasons why the regional banks are struggling, and watch till the last one. Reason number 1, these banks are far too exposed to commercial real estate. During the pandemic, people realized that they can work from home. They realize they can also shop at home. So a ton of real estate is offices and retail centers. Many of the small banks are holding a large amount of the commercial real estate loans. PacWest looks to be next on the chopping block, and it's reported that 80% of PacWest loans is actually held on commercial and residential mortgages. This means that every time the Fed increases interest rates, it's going to hurt the bank more and more. And also the declining real estate, as in the offices and retail centers, are going to make PacWest loan book worth less and less. But I want to specifically look at the commercial real estate because it's starting to put more pressure on the small banks because they're losing record amounts of value, and it's expected to get worse and worse with less people going back to work. Reason number 2 is called contagion, specifically bank contagion. In this case, the spread of fear and the collapse of one bank. So at first it started with the bank run at Silicon Valley, and from there fear spread to other customers who also pulled out of their money out of their bank. This is the other serious problem, is people are hearing about the banking issues and then withdrawing their money out of their regional bank, putting them into the mega banks. When they withdraw their money, it makes the banks weak, and when they withdraw too much, it will make the banks fail. This is another serious issue, is people are hearing about the banking issues at one bank, and then they are pulling their money out of their regional bank and putting them into the mega banks. So when they withdraw money, it makes the banks weak, and when they withdraw too much money, it makes the banks fail. Here's the point I'm trying to make, is when the people think that their bank is weak, they withdraw their money out and the bank will fail. So I want to remember that as we talk about reason number 3. This one's a little bit more sinister, and it's just kind of a theory that I have. So on most sides of a transaction, there are winners and losers. We all know this, including when stocks go up in value or when they go down in value. And my theory comes in as I think there could be a large amount of institutions betting on the fall of these banks, which is making these banks fail. So looking at the PacWest short interest, which this seems to be the next bank to go down, the short interest has nearly tripled in the last couple of months. This means that triple the amount of people are shorting the stock than normal. So when you short a stock, it brings the price of that stock down. Well, what happens when you wake up to news, much like this week, when your bank PacWest has lost 30% of its value? You panic, you probably rush to the bank to take everything out and move it to somewhere safer. Well, like I've been saying for reason number 2, this is what makes the banks fail. So could it be that institutions pile heavily into one bank, making the stock price sink, and then triggering their customers to come and take their money out, making the bank collapse? And if the bank collapses, then these short positions these institutions would take would make a lot of money. Now, this is only conspiracy that I have, but it would make a lot of sense, especially if you want to make a quick buck in a bad time. Let me know what you guys think, if this theory has any weight to it or not. To me, it makes sense. If the banks are rapidly collapsing and many assets are rapidly going to the market, then there's going to be huge discounts, and this could lead to a bigger crash. And I'm not going to go into that in this video, but subscribe to stay tuned. I just wanted to make this quick video because I thought it was interesting, and I'll see you on the next one.